Yeah, we can start with the Fed drama. And yes, again, President Trump actually just visited the Federal Reserve this week. And there wasn't any big policy news that came from it, but there was a photo op and a statement from the Fed saying it was an honor to host him. Backstory here is that Trump's really been pressuring the Fed and Jerome Powell to cut rates and possibly replace the Fed chair Jerome Powell. But it's created some kind of behind the scenes tension, but there hasn't been like a huge shakeup yet. Markets are still keeping an eye on this though, because Powell, doesn't make all the decisions. But if you've got a few losing seasons in a row, you're probably going to see the coach get fired. Talk of the week that caught a lot of interest was cutting capital gains taxes on home sales. Trump actually said he's thinking about supporting a bill that would eliminate taxes on profits from selling your home. And that would be a huge shift from the current policy we have with 250 to 500,000 exemptions. And those rules are based on marital status. But it's still just a proposal, but it could bring more listings to the market if it does ever become law, especially in places like here in California where equity gains are huge. We did get durable goods orders and it came in kind of soft. Not a huge red flag, but it is a bit of a sign that the economy is still slowing. And on the shipment side, they did tick up slightly, but overall numbers weren't really strong. And you could basically just see this as businesses pumping the brakes a little bit. And June home sales did look a little weaker as well, but it's really mostly because of higher mortgage rates, and that's slowing demand for now and building up pent-up demand. But the median home price for new homes also dropped, but that's really just because more lower-priced homes are being built and sold than higher-priced homes. Median stats are not a good way to follow trajectories for home prices, but rents, on the other hand, did tick up slightly, and we saw a continued slowdown in hiring. Jobless claims did come in a bit lower this week, but continuing claims are still the highest that we've seen since late 2021, and that just tells us that the labor market is cooling, but of course not collapsing. The Fed has been waiting to see this kind of softening in the labor market before cutting rates. But higher inflation readings have also been an excuse for holding off on those rate cuts. But overall, rates were pretty much just treading water this week. There's really no urgent reason to lock right this second if you're thinking about it, but also not much to gain by waiting unless you're a betting person and you're thinking we're going to have a surprise drop next week with all the news, because we do have a quarter two GDP, PCE inflation, that's the Fed's favorite measure of inflation. We're also going to get home sales numbers and big jobs reports. We're going to get ADP as well as BLS. And if inflation comes in tame and the job market shows a little more signs of cracking, we could see rates improve, but otherwise you can kind of expect more of the same, just smaller moves and nothing really wild. But have a great weekend, and I'll see you next Friday.